Hey everyone, I wanted to go over a few things. The last video I put out, I was kind of showing the charts on some trades I made. I did one on GST here, but before I get into that, I just want to kind of go over real quick some terms. I think people may have a little problem with or struggle with not fully understanding. So when I go to stockcharts.com, this is the graph that comes up, and it comes up with a few indicators. It has the RSI up top, it has a candlestick chart here, it has volume bars down here at the bottom, it has the 50-day moving average, which is the blue line, and then on this 1 month chart, you can't see the red 200-day, but there's also another one, and then you have the MACD down here, which is a combination of three moving averages: the 9-day, which is the blue bars, the 12-day, which is the black line, and the 26-day, which is the red line. Now, of course, if you wanted to know a little bit more about those, you could simply Google RSI. It gives you a little definition here. It says developed J. Wells Wilder. The relative strength index RSI is a momentum oscillator that measures the speed and change of price movement. RSI oscillates between 0 and 100. Traditionally and according to Wilder, RSI is considered overbought when above 70 and oversold when below 30. Now basically what that means is you see this graph area up here. You see the dotted line at the 50, that's kind of like the medium indicator. And then you have the 70 and 90 above it, and then you have the 30 and 10 below it. So when it's below the 30, which is this solid black line right here, which you see it's at right now, it means it's oversold so it's cheap. So usually it's on the lower end of the price range, which I consider to be good because that's usually when I want to buy it because I want to pay less for it. And then when you see it at the top here, which it is kind of more back here, towards the 70, it's considered overbought, which means a lot of people are buying it. So you don't want to be buying it. It's usually when you want to be selling it. And that's kind of what that indicator shows you. When it's down low, 30 or lower, no one's buying it and it's cheap. And when it's at 70 or higher, everyone's buying it and it's expensive. So you don't want to buy it when the RSI is high because the momentum is trending upwards and people are buying it. At some point, it's going to crash. It's going to come down. Stocks go up and down year round. That's what they do. So typically you want to get it at the lower end. So when you see a chart like this, the RSI, and you see it sloping downward like this, basically people are selling. And now it's kind of at the bottom, so it's at the oversold range. So usually what happens is there'll be a transition where we'll start going back up, or it might stay down lower for a little bit, it might go up a little bit, then come back down. That just depends. But right now it's in the oversold range, and that's basically this top graph here. And then you have the MACD, which is down here, and if you look that one up, get an explanation of it as well. It says moving average, convergence, divergence. MACD is a trend following momentum indicator that shows the relationship between two moving averages of prices. The MACD is calculated by subtracting the 26-day exponential moving average EMA from the 12-day EMA. So what you basically get out of this is kind of like how you have your 50-day moving average up here. And let me go to a 6 month so I can show you both averages, give you guys a better idea what I'm talking about. It's assuming this graph will even load. Come on. There we go. So you see the red and the blue. The blue is the 50-day moving average. The red is the 200-day. So these are basically two averages. The 200-day is a more slower moving average because the name as implies it does every 200 days. And then the 50-day moves a little faster, so there's more arcing and moving in it because it's a 50-day moving average. Now the MACD is comprised of three averages. The blue kind of bar line along here is the 9-day moving average. The black line is the 12-day, and the red line is the 26-day. Now, usually when you use this, it's a good momentum indicator because you can kind of see where the stock is kind of trading. So right now, you see this kind of big blue line as it's going down here. I mean, it's oversold and it's trending downwards, so it's kind of getting overextended as well. It's getting cheap, which is in compliance with the RSI here being oversold. But typically, what will happen is whenever it starts coming back up, you usually see a reversal trend where the 12-day starts approaching the 26-day. And if it crosses, like you kind of see here it crosses, here it crosses, here it crosses, here it crosses, Basically, where all these the 9-day kind of moves up and down, up and down. It follows the cross. Usually, it'll start trending in the next the opposite direction. So now it looks like it's going to start trending upward as soon as it crosses, and then this stock chart will go up, and then the RSI will go up because it will start be getting bought. Now, when I typically trade, like I like using these two indicators on the top and bottom, but I also like checking the 50 and 200 day. I like looking at a 6 month chart usually for that. And whenever the blue line is over the red line, basically the 50 days over the 200 day, it's a sign of an upward trending stock. Usually, if the red line's over the 50-day line, then it's usually a downtrending stock. So I typically want to buy an uptrending stock with low RSI and potential reversal in the MACD. Usually, especially when it's been overextended like this, like you see these little blue humps, like up down, how they're very tight and small. And then right here you have a big overextended. So when it's like this, the stock kind of trades, just like up and down, up and down. There's no big change, just upward trending. But when you get this big overextended area right here, that's when you see like a drop like this, because there was a sharp move in the trade and it was a downtrend, as well as the RSI up here kind of being on the top half. It looks like it bounces off the 50-day dotted line a few times, and then it peaks at the 70-day moving line with it going over just slightly here, and then it eventually comes down. It got oversold for so long that it was so high that it eventually just dropped down. Basically, people started selling and getting out of it. So kind of like I always mention, like look at the history of the stock, where it came from, to kind of get a better understanding. And this is a good example of the stock being run up really high and then getting dropped down. So when I bought it, go to 1 month, we'll get a better look. When I bought it at when after I saw this kind of like little dead stop with these candlesticks. And what I did is I got in. Let's see if I can show you guys with the line. I got in around 140, right about here at the bottom of this red candlestick, and then I got out around 145. So I traded this very small window on the 20th, which is indicated right here, the date. And I made like a 4 or 5 cent move, which wasn't much, but I had like a couple hundred shares, so it made me a few dollars. But I made my decision based on the overextension and the 9-day moving average on the MACD, what looked like a potential reversal on the MACD when the 12 and the 26-day are nearing each other, look like they're going to cross. And then also the RSI is showing me that the stock is oversold. So all these indicators basically showed me that the stock is kind of near the bottom of its trading range. So it's a good time to get in it for a cheap price, because it's more than likely, not guaranteed, more than likely going to go up. So using those indicators like that, that's kind of what justified my purchase. And I made, like I said, the little 5 cent move, and went up. Now after it went up the next day, it went down, but I was already out of the stock by then, so it didn't really matter to me. But I am still interested in getting back into this stock possibly later, because these lines haven't crossed yet. And usually, like right when they cross, it's going to be an uptrend, and you'll see this blue line, which is kind of on the downslope, kind of start heading upwards, and then it'll be above it, and then the RSI will start shooting upwards as well. So that's kind of a run through of some of the indicators that I use, and then how I use them to trade this stock here, the GST. Now, if this might have been gone a little fast for some people, and I'll try to make more videos on this with more explanations in the future. I just want to kind of give everybody like a base of like what I'm looking at when I go to stockcharts.com, and this information like auto populates. Like if you put in like FB, for instance, Facebook, it's still going to be the same chart. It's going to always pop up as a 6 month chart. It's going to have the RSI. It's going to have the MACD down here. It's going to have candlesticks. It's going to have the 50-day and 200-day. This is always what's going to populate. And I can tell you right now, if this was any other stock, I mean, Facebook doesn't even matter. I'm not going to buy it, because look where the RSI is at. It's at the 70, so it's like it's overbought right now. It's expensive. I want it to be like over here where it's down low, and you could see it even traded much lower when it was in this range. And even the MACD indicates like this sharp drop right here, where It was really oversold, and then it slowly started going upwards, and it crosses, but it keeps kind of tight. And even the 9-day moving average is maintaining relatively flat, so it's not much movement going on. But like I could tell you just off top within a second of looking at this graph, I'm not gonna buy it. You know what I mean? And then let's say like I go to like Tesla for instance. I look at this graph. You know, I could tell you already I'm not gonna buy it because it looks like this MACD just crossed back over. Because look at how it got overextended, and then it crossed. I don't know if you could tell. There's like a slight hump right here, and then it's going back down. Let's see if we can bring this to like a 1 month. Give you guys a better look. So you see how it gets really tight in here, in this area right here. So I don't know if it's gonna go up or it's gonna go down because it's not a because it looked like it started barely going up over the red line, the black over the red, but then it came back and it touched and flattened out. So it might continue going downward. Now the RSI is about mid-range, so there is potential for it to go upward. But I typically trade these two indicators together. You know, this has to be low, and then this has to be showing a potential reversal trend going in the upward direction. So like, you know, I wouldn't trade this stock. And then we could say like Clorox, like CLX, see what that one's doing. So I could tell you right off the bat, this one's already not going to happen because look at all this green up here went way over the 70 range. It's way overbought right now. So more than likely it's going to start coming down. And then if you look at the MACD here, it looks like the 9-day is starting to get a little larger in the downward direction. And the reversal happened already where the 12-day black line went over the red day or the 26-day red line, and now it's under it, so it's going down. So I'm not going to trade that one, you know. So using those indicators like that kind of tells me really quickly if I want to spend my money on the stock or not. And these last three ones I showed you, I don't want to buy them because certain indicators aren't matching up, so I don't want to waste my time on it. So that's kind of a just a quick elaboration again of kind of what I'm looking for. So if you have any questions on this, of course, you know, ask me. I'll do my best to answer them. I'll try to explain it in the best way possible, and I'll do my best to follow up on some other videos to help you all learn the indicators and how to use them and stuff. And as always, if you like my content, help me out, click like and subscribe, and I'll keep making videos for you all. Look forward to more of these charting videos. I haven't done some of these in a while because in the beginning people weren't really or they didn't seem very interested in them. But I think it's good to keep coming back to these because you know I want to tell you guys about fundamental analysis. I want to tell you about technical analysis. I want to tell you about like macroeconomic issues. I want to tell you about politics and economics and how like some issues are tied together and they influence each other. You know, I want to give as much information as possible and as many aspects of trading as possible. So I'll do my best to keep that going for y'all. So catch you on the next video.